Volatility, surprisingly, in the market moved down in the second quarter after rising dramatically in the first quarter of this year. So 33% of the trading days in the Russell 2000 were 1% moves in the first quarter of this year, and that dropped to 19% in the second quarter of this year. And contrast that, year to date, we're about 26% versus 40% over the past 20 years. So we do think that volatility is going to increase. I think many investors were lulled to sleep last year by the lack of volatility in the overall market. But as an active manager, higher volatility we think is a positive thing. And you should be seeing more volatility in the market going forward. Now, volatility, important to note, is not mean reverting. So it does tend to happen in pockets, and we think that's actually quite healthy. There does seem to be this dislocation or almost dichotomy between the markets and the overall economy. Clearly, evidence is presenting itself showing that the domestic economy is getting stronger. We're seeing not only from earnings, but we're hearing it from businesses as well. The overall tone that we hear from the business is actually quite positive. But yet the market seems to be focusing on many of the businesses that have worked before. So in the second quarter, we saw healthcare do quite well. We saw non-earners do quite well. We saw bond-like proxies do well for periods of time. And I think part of that is just the market being the normal market. Investors are tending to focus on what has worked in the past as opposed to looking out 3 to 5 years. Our job as fundamental investors is to look at the underlying fundamentals of the companies in front of us, take advantage of those market moves when we can. Higher volatility portends well for active managers. Lower volatility tends to help out passive managers. And over the past 7 years, we've seen a variety of moments where volatility has been quite low and passive has done quite well. One of the things we think as we get to a more normal environment going forward is that you're going to see higher volatility. It's part of the reason why we believe active managers should do better going forward.